Hi everyone, it's John from RFM Calc, and today, as part of our series taking a deep dive look into our core reports, we're going to talk about our customer lifetime value reports. So these reports are available on every plan, as you can see down here. So we've got it, where's it gone? There we go, lifetime revenue reports. So this has been a core part of RFM Calc since we initially launched the service, and you can see right from free to our huge plan, these reports are available in the same format on every plan. So I think the first thing probably just to touch on is you might have noticed that in some places we refer to it as lifetime value, in some places it's lifetime revenue. So we use them fairly interchangeably on RFM Calc. You can essentially report on both. So technically the difference between lifetime value and lifetime revenue is lifetime value is based on profit. So you'll be passing through a profit figure in your order file rather than a revenue figure. The difficulty with that in most e-commerce platforms is you may well be able to pass through certainly an order value net of tax and net of shipping, but you might have more difficulty actually getting through a profit per order value based on the product cost. But even if you could do that, then actually trying to factor in your marketing costs and all your other costs into one order line in your order file to say, actually, this is the real profit figure per order is actually really, really difficult. And there's very few, I don't think there's any e-commerce platforms that can do that. So that's why typically we'll be reporting on lifetime revenue, which is based on the actual revenue the order generates rather than the profit. But because of the flexibility with RFM Calc, you can pass through any value you want as that order value column when you upload your order file. So either one's fine and we'll support both. So I think the other important thing to define when we're talking about lifetime revenue and lifetime value is what do we mean by lifetime? So at RFM Calc, we take a very literal definition of lifetime as in the lifetime value and revenue of your customer over their entire relationship with your e-commerce brand. So that might be a short period. They may only return once in 3 months' time and never come back, or they may come back in subsequent years. So they may return many, many times over a 6, 7, 8, 9, 10 year period. That's absolutely not unusual now with e-commerce. So we'll give you the reports and data to see that really, really clearly in terms of when those customers are coming back and their total lifetime spend with you on average, which allows you to make a lot of important decisions. And we do also give you yearly snapshots as well. So sometimes you might see definitions of lifetime value being based on how many orders a customer places and how much they spend over a 12-month period. So that's not really lifetime. That's not a lifetime relationship for most e-commerce sites. Most e-commerce sites will have customers who return many more times over subsequent years than just in a 12-month period. But because sometimes people do like to look at that as well, we include that in our reports, which I'll go through shortly. The final question that's really important to ask before we start looking at some real example data is, why is lifetime value important? So the simple answer is that when you're thinking about the cost of acquisition for customers, if you're looking just on an average order value basis or just on an average order value basis by channel, so let's say you're acquiring customers through paid search, you might say, okay, for every $30 we spend, we're only getting $50 back in terms of the average order value of those orders on a last click basis, or however you do the attribution. You're still always going to have this issue where if you're basing it on one order, the spend is not going to potentially not look fantastic. Whereas if you actually can get data for lifetime value and say, actually, okay, on their first order, they only spend $50, but they then come back on average and place 5 more orders over a 3-year period. And their spend actually is closer to $300 for every $30 we're spending to acquire them in the first place, because obviously to get them back to the site will cost you much, much less to retain a customer than it does to acquire a new one. Then suddenly it really opens up the possibility of spending more. And justifying that to a business, whether you're working as an agency with a business, whether you're working internally and you have to justify it to your finance team or your C-level board in terms of how much you're spending to acquire customers, if you can base that around lifetime revenue or lifetime value, you have a much greater chance there of being able to spend more and therefore grow your business faster by looking at that. So it's a really, really important metric. And it's not, I think sometimes people look at lifetime value and lifetime revenue as a bit of a fudge, and it's a bit of a, okay, how can we just come up with figures to allow us to spend more? But if customers, and you can prove customers are coming back repeatedly in future and spending more and more with you over a long time period, then it absolutely justifies the argument to say we can afford to spend more to acquire them in the first place. So it's a really, really important metric. When you're growing a business, you can't really scale a business effectively without looking at this and understanding this, because you'll scale much, much slower if you're only spending on customer acquisition based on their first order. Whereas if you could look at the lifetime, it really frees up the thinking, it frees up the possibility then to spend more and justify spending more. And if you can spend more in terms of customer acquisition, you will obviously acquire a lot more customers a lot faster and scale your business much faster as well. Okay, so probably the easiest way to demonstrate how we report lifetime value and lifetime revenue is to show a few real example reports. Obviously, all this data is anonymized, but this is from real sites across a range of different verticals, completely different sites to each other, completely different platforms. So we've got some Shopify examples, some Magento examples. It really doesn't matter. And the beauty of RFM Calc is it's completely platform agnostic. So we can produce the same reports for you from any e-commerce platform, literally any e-commerce platform in the world, as long as you're able to provide the data to us. So this is a fairly sizable Shopify site, and we've got data here running from the end of 2017 to early 2022 with around $41 million of revenue in that time. So if I just click the lifetime revenue section to scroll down, the first thing we have is just a little intro in terms of lifetime revenue, basically what I've said on the video and why that's important. We've then got customer lifetime revenue by year. So this is what I was saying at the start of the video, that sometimes people like to look at this on a yearly basis. So each year you can say, okay, for customers who placed orders in 2020, for example, the lifetime revenue in terms of orders just in 2020 was $292, and customers placed on average 1.58 orders per year in that year. But as you can see immediately based on this example, the average order value was only $185. So if you were paying, let's say, $150 to acquire customers during this year, you'd probably be looking at that and saying, okay, that's not a great return. But actually, when you look at how much they'll spend over the entire year, $292, actually that's much better, and suddenly a $150 acquisition cost looks much, much better in terms of acquiring new customers. So that's where, just as a snapshot, this data is so powerful. But what we do also include, of course, is the overall lifetime revenue. So this is for all time, and this is where the data is really, really powerful to actually say, okay, for the entire relationship of a customer with our site, how much are they likely to spend? How many orders are they likely to place? And you can see here, it's almost $350 for this site. So that's why if you're looking at just a year segment, nowadays in e-commerce, if you're only looking at a year, that's pretty short in terms of assessing lifetime revenue, because for most e-commerce sites, and again, look, there's always edge cases, there's always cases where this won't apply. But for most e-commerce sites, customers will return within 12 months, but also beyond 12 months as well. And that's really important to capture that, because you don't just want to isolate yourself to looking at a 12-month period, when actually you could be generating much, much more revenue from that customer over a longer period, which is really, really important to know. So you can see all time for this site, it's $347 and 1.8 orders, which is obviously higher than any individual year, but obviously the AOV is still an average. So when you're thinking about customer acquisition costs all time, and you're thinking, how much can we spend on our next campaign? If you're only basing it on this $191, obviously, if you're working within that, that doesn't give you as much freedom in terms of customer acquisition spend as saying, actually, we know customers will bring us nearly $350 over their lifetime. So therefore, we can fully justify spending more. So the next section of the report is lifetime customer orders placed. So this basically shows how many customers as a percentage are placing 1, 2, 3, 4 or 5 orders based on your site. So you can see for this particular site, the majority of customers, 66.46%, even though we've got quite a high lifetime revenue, are only placing 1 order. So this is obviously really valuable data to know, and we split this into a pie chart here as well. Now, this is a section that can vary significantly depending on your site, depending on your vertical. So this is obviously for a fairly standard Shopify store that's doing very well, but most of their customers only place 1 order. If I look at this example on Magento, so you can see this is I've called it high repeat test. So this is a B2B site with a very high returning customer rate. So if I go down to their lifetime revenue section, you can see the actual lifetime revenue here is massive. It's £11,500 per customer. On average, customers place 59 orders. So you can see here the difference between basing your acquisition on just the first order of £200 versus the actual lifetime revenue of 11,500. I mean, this is a very extreme example, but a very real example in B2B. So you can see the value there, that actually if you're spending £2,000 to acquire a customer on this particular site and they go on to spend 12,000, that's a really good return. But obviously if you were only looking at it on the first order basis and saying, okay, we've spent £2,000 to acquire this customer, they've only spent £200. That's obviously a terrible return. So it's very, very important to understand this, even more so if you have a high repeat order rate. But what you can see here on the lifetime customers order placed table is, as you'll notice on Shopify, this is Shopify example, we go 1, 2, 3, 4, 5 orders. Now that's pretty standard because most e-commerce sites aren't having a massive amount of repeat business. Obviously there's a lot there, but in terms of volumes, a lot of e-commerce sites, most people will only place 1 order. But you can see on this site, because actually they have a high repeat rate, it's split into different bands. So RFM Calc will calculate these order brackets automatically for you. So you can see we've got 1 to 2 orders, 3 to 7, 8 to 22, 23 to 72, and 72 plus, just because of the high repeat order rate. And that allows us to segment this into something more meaningful for this particular site. So that's absolutely automatic in RFM Calc. You don't have to do anything. We'll work out those bands for you. And then what's useful is because you might have seen here that we say 66.46% of customers have purchased 1 time from this site. And you might be thinking, well, that's obvious. Why would you repeat that information? Well, the reason is when you have sites like this, where we're into bands, you can see 21.85 place 1 to 2 orders, but you can't see in this table how many customers only place 1 order, which quite often is a metric you'll want to report on. That's why we include this line here, which says 13.61% of customers on this site have only purchased 1 time. So that's really useful data. That's obviously quite a nice metric to keep an eye on because you want, ideally, more and more customers to repeat purchase, so less and less customers to only purchase 1 time, and that's something you'll want to monitor over time. So this table allows you to do that in conjunction with that extra line of text as well. Okay, so if I just jump back to my Shopify report, let's have a look at the next table here. Now, this is lifetime repeat and churn rate by order count. So this is really, really powerful data as well, and it's amazing. Well, it's not amazing because most e-commerce platforms don't give you this information, so it's completely understandable why most people don't look at this. But in terms of, again, justifying the importance of repeat custom, it's really, really powerful data. So what you can see here is that for customers who place their first order, the likelihood of them purchasing again is 33.5%, and the percentage who churn, therefore, is 66.5%. So what that's saying is about a third of people who place the first order come back and place a second order. But what's really interesting is if you look at the second order, that then leaps up to 48.5%. And you'll see this is really, really typical in e-commerce. So once you place the second order, the chance of coming back to place a third order is much, much higher. It's 48.5%. And then once you've placed a third order, the chance of coming back again to place a fourth order is higher again. It's now more than half. We're up to 56% in terms of people who place a third order who then go on to place a fourth. So what this is showing is the importance of customer loyalty and how e-commerce platforms work. And we've looked at this data across dozens, hundreds of e-commerce sites, and the pattern is invariably the same, that if you can get the customer back for a repeat purchase, they are then more likely to go and purchase again. So I've got another Magento example here from another site. This is over a much longer time period, so 2014 to 2021. A fairly sizable site. We're getting on for kind of 18 million in revenue. So if I go down to the lifetime revenue section, so obviously we've got all the sections we've talked about already. But then when you look at the repeat churn rate here, because we're looking at a long period, we've got a really accurate picture of this. And you can see here, if a customer places a second order, they are more than 50% likely to come back and place a third order, which is massive. That's so important when you're thinking about justifying the value of repeat customers. If you know and you can see that there's this customer loyalty built in, that if a customer places a second order, if you can get them to place a second order, they are more than 50% likely to come back again and place a third. That's massive to understand that. It's really, really critical. But so many e-commerce platforms don't tell you this. So many people working in e-commerce don't understand this. But the trend is there. But being able to demonstrate it like this to your client, if you're an agency, to the C-level, if you're working internally, is so valuable in terms of then justifying, okay, this is why we're putting all this effort into getting repeat customers and retaining existing customers. It's so important because if we can get that second order, they are then more than 50% likely to go on and place a third, a fourth, a fifth, and so on. So it's absolutely massive, really, really crucial data. So as well as giving a data table, and as you'll have seen on previous videos, I'm sure you can just copy and paste this really easily into Excel because it's structured as a table. We'll also give you a graph visualization of this data. So obviously when you get towards the kind of top end here, it kind of gets a bit wavy in terms of the percentage, but what you're looking at here really is the trend. So this is showing, based on order count, how likely the customer is to order again. So exactly the data we've got in the above table, but just presented visually. So you can see on the first order, the percentage of order again is 33, but then it leaps up, as we know, to 50, almost 51% for the second order, and then 59 for the third, 62 for the fourth, and you can see there's a definite trend there that the more orders a customer places with your site, the more likely they are to return again and place a future order. So obviously when you get to kind of the 49th, 51st and so on order, we'll present this data to you because it's interesting to see, but it's really this initial trend that will help you justify the spend on repeat customers. So not just the lifetime value piece, not just in terms of that initial acquisition, but then once you've got the customer, this could really help you justify the spend on retention as well. So I think sometimes, and I see this increasingly actually in e-commerce, people think, retention's overrated. We don't need to spend anything on retaining customers. We just want to focus on getting new customers. But as I've said on previous videos, there are a finite number of new customers out there for your product or service. You can't wait for new customers to be born. At some point, you're going to need your existing customers to come back. So being able to justify this and being able to spend, say, on email retention and so on and different ways of retaining customers, if you could justify this and show actually once a customer places a second order, they're actually more than 50% likely to come back and place a third anyway. I know, for example, this site doesn't do a great deal on retention, so this is purely natural. That makes it much easier to justify that and say, okay, we really need to think about how we're retaining customers, because the importance of getting the customer to come back for that second order is massive. And then once you've got them for that second order, they'll probably come back anyway, more than likely. But then you can also look to improve these metrics and say, okay, if we do more retention between the second and third order and third and fourth order, if we do more focused work on that, can we get even more customers to come back and build that loyalty? And it's massively important. But this data really gives you such a solid starting point in terms of justifying that to a business. It's incredible. It's fantastic data. You can see, you point out, I'm very passionate about it. But a lot of e-commerce brands really don't understand this, and obviously that's why they come to RFM Calc to get this data. So the final section that I wanted to talk about in the lifetime revenue part of the report is lifetime revenue by first order month. So this is quite interesting as well. So what we'll do is we'll chart basically month by month the first time customers, the lifetime revenue of those customers, and the repeat and churn rate. So this can be quite interesting, because what we'll find and what you'll find sometimes is you might do something in a particular month where you're acquiring customers, and you might want to know let's say for August 2018, I want to know the lifetime revenue just from customers who placed their first order in that month. And that can be really powerful data. So we can see for this particular site in August 2018, there were 1,319 first-time customers. The lifetime revenue was £148. The lifetime orders was 1.8. And 37% of customers came back for a second purchase based on customers who placed their first order in August 2018. But then you can see in December 2018, the lifetime revenue was much lower, only £109. Only 1.44 orders, and only 24% of customers who placed their first order in December actually came back and placed a future order. So then you can compare, okay, what did we do in August? What did we do in December? What was different about those months? Were we running a campaign here that was more likely to appeal to first-time customers and get them thinking about the brand and get them loyal to the brand? Whereas in December, I know for this site, it's kind of a bit quieter anyway, but were we doing enough in this month to actually get customers coming back in future? Because you really need to think about that loyalty from day one. Obviously, you'll see here, lifetime revenue is a long-term thing. So it's not a case of, sometimes you see really stupid things that people write in e-commerce, like, oh, if a customer doesn't return in the first 90 days, they'll never come back, which is absolute nonsense. We'll talk about that in further reports as well, in more videos. But at the same time, you can look at this and say, okay, so in certain months, we're actually generating a higher lifetime revenue from customers who joined in that month. So what were we doing there? Can we replicate that in months where it's lower? So this is actually requested by people. We did have this because we obviously had a bit of feedback and we worked with a few people when we put the service together. But this was a common request, and it's actually really interesting to be able to look on a month-by-month basis what the lifetime revenue is for a particular first order month. And you can do this, as I say, for any site, for any platform. So this is a Shopify site. Again, with the same data. For this one, you can see the lifetime revenue was really, really high in some months. So May 2018, really, really high, $500 or $540 nearly for customers who came in May 2018. But in October, it's down at $345. So still, you know, a pretty healthy lifetime revenue, but much, much lower. So it's then, okay, what did we do in May? What did we do in October? Why is it so much higher in May? And what can we learn from that? And look, there'll always be a seasonal aspect there. That can play a part, but it's really important data to understand. And you can look at your marketing and your retention and say, okay, why are we retaining so many more customers who first purchased in this month versus customers who first purchased in this month? So yeah, again, really, really powerful data. And then the final part of our lifetime revenue, lifetime value section on the report is just that same data again from the chart, lifetime revenue by first order month, but in a table format. So again, you can easily copy and paste this into Excel. So that's why we present it in a nice data table, and then you can do your own manipulation as well. So obviously, when you're thinking about lifetime revenue and lifetime value for your most recent order month in the file, it's not going to be super high because it's only based on a single month. So the last month in the data for this particular site is April 2022. So obviously any orders placed after April won't be captured in this in terms of first time customers in April. So but it gives a nice comparison, and you can see it's not just a case that it just shoots up over time. You can see there's lower months, like December 2018 is much lower than January 2019, for example, in terms of lifetime revenue and the average order or the average orders placed per customer. So it gives you a nice overview as well in terms of that lifetime revenue figure by first order month in a visual table, as well as the charts above. Cool. So that is pretty much it for the lifetime value section of the report. So there's some key questions you might be asking. The first one is, okay, if a customer places their first order in February 2022, when do they actually come back and place repeat orders? So that is answered in the cohort analysis section, which I will do a separate video on. The next question you might be asking is, okay, we can see how many orders a customer places and how much they spend over their lifetime, but how long does it take them to return? What's the average time between orders? Which is absolutely critical as well when you're thinking about retention and when to retarget customers. Again, a lot of people don't know this data. A lot of people don't understand this data. They'll just say, oh, if they don't come back in 90 days, they're gone, which is absolute nonsense, as I've said already on this video. But you'll be pleased to know there is a dedicated average time between orders section on the report as well. So I'll be doing another video on that very, very soon. But in terms of lifetime revenue and lifetime value, that's it. In terms of what we report on. So you can see we give a lot of data here, a lot of really interesting data in terms of lifetime revenue, lifetime value, percentage, repeat and churn rates, a lot of really, really powerful data that can help justify principally your acquisition and marketing spend on acquiring new customers, but also then your retention spend in terms of actually how much effort do we put into retaining customers. Because if you can demonstrate the increased loyalty, which is really, really easy to visualize and show and prove with RFM Calc, you can then invest a lot more in your retention plans as well in terms of making sure those first time customers and those second time customers become really loyal long-term brand advocates for your e-commerce business. So hopefully that's been useful. Really appreciate you watching. Obviously, if you've got any questions on the RFM Calc service, please feel free to visit rfmcalc.com and drop us a query. But if not, look forward to seeing you on the next video. Thanks, everyone.